at 2%. And so I think we're going to have to be attentive to whether we see prospects that this excess over 2% is going to run for some time but moderate back down to 2, or whether this is going to be more persistent. And at this point, I don't know the answer to that, and I think we have to have a balanced approach and be prepared to react depending on how this unfolds.
Robert, the strong jobs report in July, or for July, means we did about 2 million jobs over the past 2 months. It seems like that part of the mandate is going okay. I want to turn now to your views on asset purchases and policy more broadly. Last time you spoke publicly, you said you were in favor of tapering soon and sooner rather than later. Are you ready at this point? Do you have in your mind a timetable for that tapering?
It would be my view that if the economy unfolds between now and our September meeting, if it unfolds the way I expect, I would be in favor of announcing a plan at the September meeting and beginning tapering in October.
Oh, that's pretty aggressive. Would you say that's you have a lot of support on the board or the committee for that kind of idea, or is that just you? I don't know, from the Lone Star State?
I would say there's a range of views, and the main thing I've emphasized, whether we announce it in September or whether we announce it November 1st, I think there's a range of views. I just think the committee is in a much better place than we were 2 months ago, and that we'll debate, we'll disagree, we'll have to see how the economy unfolds. But the reason I'm saying we ought to begin the tapering soon is I think these purchases are very well equipped to stimulate demand. But we don't have a demand problem in the economy. We've got plenty of demand. Our issue is supply. And these purchases are not very well equipped to deal with that issue. They were appropriate in 2020. They were appropriate in early 21. And so my thought is I'd rather take the foot off the accelerator soon and reduce the RPMs and as we're on more level terrain. And I think it will give us more flexibility down the road to have patience on the Fed funds rate. But what I don't want to do is keep running at this speed for too long, and then we're going to have to take more aggressive action down the road. So I'd rather begin this process soon, and I would like to taper once we start gradually, and for me, gradual means over approximately 8 months.
Over approximately 8 months. It's Kelly here, and I appreciate you letting me jump in. I've actually so many questions, as Steve probably can imagine, after hearing your comments here for the last few moments. I suppose then the main one I actually want to ask you right now is about bond yields, President Kaplan. So why do you think they're down at 1.35%? Do you think they hold any economic information at this point? Are they being distorted by the Fed itself? I hear everything that you're saying, and it all makes sense to me, except that. And the people who are now arguing that inflation has peaked are saying bond yields knew this months ago, they've already figured it out.
Yeah, I do think the bond market is looking through these high inflation prints, and they're expecting the Fed to do what it needs to do to anchor inflation at 2%. In addition, there is an enormous amount of liquidity globally and in the United States. We're an aging society. There's an enormous amount of money in pension funds, and there's a very strong bid for the 10-year Treasury. And in addition, after we get over the horizon from this rebound from the pandemic, workforce growth is decelerating in the United States due to aging. Productivity doesn't appear to be strong enough to offset it. And if that's true, out-year growth looks sluggish, not just in the United States, but globally. And so I think all those factors are feeding in to where you see the 10-year Treasury.
President Kaplan, I want to continue the discussion on monetary policy, which is really related to what Kelly was talking about. You began and made a couple comments there about interest rates. Can you walk us through the sequencing in your mind? You talked about an 8-month taper. I didn't do the math, but I think if I add 2 months and 6 months, it brings me to June. I just did that live on national television. Are you thinking that interest rate hikes begin immediately thereafter?
So I am explicitly saying, and I've been saying publicly, I am divorcing my decision-making on adjusting purchases for my views on the Fed funds rate. And so I don't want to tie them together. There's different metrics and a different set of criteria I'll look at in deciding whether or not to raise the Fed funds rate. What I'm saying is these purchases are not well suited to the environment we're in now. And like a doctor who's prescribing medication to a patient that's been through a trauma, if you start to see side effects and you don't think the medication is very effective, and the side effects I'm talking about, excess risk-taking, elevated home prices, excesses and imbalances in the economy, I think the best thing to do is early begin weaning off that medication. And I think by doing that, we actually may be able to be more patient down the road on the Fed funds rate. But I do not want to tie the two together. It is not the primary factor that I'm thinking about in calling for adjusting purchases soon.
I get that, President Kaplan, but one of the distinguishing features of your background being on the committee is that you were an investor and on Wall Street for a while and know a little bit about this and how some of your former brethren on the street think. And they're going to think, hey, Kaplan wants to get rid of the asset purchases, and that clears the way for raising interest rates. Maybe tell us what your criteria are for raising rates and whether or not that's something you think would happen in 2022 or 2023. Thank you.
So as a former observer of the Fed, I think and a market participant myself for a long time, if the Fed says that these are two different decision criteria, as a market participant, I would listen to that. And I do believe that. And so that's why I'm saying it. As you know, in my SEP submission, Summary of Economic Projections in June, my first rate increase is in 2022, but that's not a decision I'm making right now. That's just a forecast. I'll make that decision as the economy evolves into 2022. I am saying there's a near-term decision, and I think the sooner we make that decision, I believe we're going to have more flexibility, if necessary, to be patient on the Fed funds rate. And yeah, I think as a market participant, I think that logic is worth listening to.
President Kaplan, it's Kelly here, and just one more to kind of dig into your explanation of why we don't need to continue the pace of asset purchases. In other words, if you say we have a supply, not a demand issue in the economy, can you explain how the labor force supply ties into that? So if we have people who have left the labor force for early retirements because they have work from home flexibility, it maybe allows them to live somewhere differently, lower cost of living, only one person has to work and so forth. Can you tell us what you're seeing in terms of those quote unquote dropouts and how that affects the supply side and overall the sort of fundamental strength of the economy?
So there's two types of supply issues. One is materials, semiconductors, a broad range of supply-demand issues for materials, and the Delta variant may actually make those more prolonged because they affect the ability to produce and to produce globally. And I think what contacts are telling me is semiconductor shortages, for example, are likely, in their view, to persist longer than people might be expecting. And the demand for semiconductors is increasing while the industry is trying to increase supply. So one person described it as trying to go up a down escalator. We're trying to increase production as fast as we can, but demand is also increasing. So that's one set of issues. The second set of issues is labor. And as you pointed out, we think at the Dallas Fed, there's been approximately 3 million retirements since February of 2020. Many of those people may not come back into the labor force. And then there's been 1.25 million to 1.5 million people who are caregivers, mainly working mothers, who have left the workforce. I'm hopeful that with expanded daycare, schools reopening in person, some percentage of them will come back. But the point is, the labor force is tighter than the headline statistics indicate. The number of job openings in the United States is at a record. Quits rate is historically high. And so all that tells me these supply-demand imbalances are likely to go on for an extended period of time, but they don't have to do with demand. They have to do, they're going to create supply issues And so these purchases are not terribly well equipped to deal with those issues. And I think it'd be healthy for us to recognize that.
President Kaplan, to an extraordinary degree, and I've been covering the Fed for a very long time, Chair Powell and other members of the committee, such as yourself, have talked a lot about how the importance of what the Fed does for average Americans. But today, the government reported real earnings. When it reports CPI and inflation, it says how much wage gains have been deflated by inflation that's out there. And they're negative now for, I believe, the 4th straight month. How does the Fed step up and argue that it's now doing right by average Americans and average American workers when, in fact, the inflation that it's abiding is eroding wage gains?
Yeah, so I spend a lot of time, as you know, in low, moderate income communities in my district. And what I see time and time again in my conversations, people in those communities are reminding me our mandate is full employment, but it's also price stability. And the share of wallet, as you just pointed out, that low, moderate income communities are spending on gasoline, cars, other items, it is creating challenges for them to make ends meet. This is, again, back to our purchases, this is one of the reasons why I would prefer, from a risk management point of view, to ease off the accelerator and reduce the RPMs on what we're doing, because I think these imbalances, we're going to have to be patient and allow them to unfold. But I think anchoring inflation at 2%, I take that very seriously. It's a critical part of our mandate. Inclusive growth, inclusive prosperity is not just jobs, it's also price stability.
And we'll leave it there. President Kaplan, thank you so much for all of your thoughts on this today. It's great to have you with us. And Steve, we really appreciate you for bringing us that interview, doing a great job with it, our Steve Leisman. We've seen some big moves in bond yields. Now, yes, it was during the course of that discussion, but we've also had a super strong auction for 10-year treasuries. Let's get right over to Rick Santelli with a little bit more on what just happened here. Rick?
You know, I'll tell you what, Kelly, I've been dabbling in markets or trading in markets or covering markets since 1979, and I don't know if I've ever seen an auction this aggressive. It really was spectacular. 41 billion 10-year notes. The auction, the Dutch auction yield was 1.34. 3 basis points lower than the when issued market was trading. Lower yield, higher price, and it was an awfully high price. The metrics are historic. The bid to cover at 2.65, the best since May of 2020. 77.2 on indirects. Indirects are those foreign investors we pay so much attention to. That's the highest ever. The highest ever. And if we look at directs, it was the only thing that was a bit light. It was a bit under the 10 auction average at 13.1. But remember who this group is. This is mutual funds, all the big institutions that have bellyfuls of treasuries that can dabble in the secondary market. And finally, maybe the best. You know, think about a big buffet, okay? Because there was nothing left after this auction. The dealers only took 9.6%. Having a single digit on dealer participation is unheard of. A spectacular A+ on this auction. Tomorrow we complete it with 27 billion 30-year bonds. Kelly?
Rick, I gotta just ask you one follow-up question on this. So with all of the superlatives you just mentioned, why are we sitting here in mid-August all of a sudden with people just going after these 10-year treasury notes? What accounts for this dramatic response today?
Well, I can only think of my very good friend Dom Chu. In the very beginning of this segment, he said 7 sessions in a row where there's been selling pushing up yields. Obviously, investors, and maybe especially foreign investors, think, well, you know, we've sold off, we push rates up. This is a great place to buy in. And maybe they're right, but my charts say maybe they should have studied a little harder.
All right, Rick, thank you very much. Rick Santelli with the latest auction results there. As we mentioned, we're seeing yields slide on the back of that strong demand in those results. Going to take a quick break, but we're going to get more reaction right after this to what we just heard from the Fed's Robert Kaplan. We're keeping an eye on markets, hanging on to record high trading here. We'll talk about the latest inflation data, Kaplan's belief about what the Fed should do here, and one of my next guests who says they shouldn't move till early next year. We're also watching shares of ThredUp this afternoon, turning lower, down 3% now after beating estimates on its second quarter results, giving an upbeat forecast. And we're going to have the CEO here to talk exclusively about the quarter, their path to profitability, and the impact of COVID. Look forward to that a little bit later this hour. We're back in a moment.
This is The Exchange on CNBC.
Hey, Lily, I need a new wireless plan for my business, but all of my employees need something different.
Oh, we can help with that. Okay, imagine this, your mover, Rob. He's on the scene and needs a plan with a mobile hotspot. We cut to downtown. Your sales rep, Lisa, has to send some files, like ASAP.
So basically, I can pick the right plan for each employee.
Yeah, I should have just led with that.
With AT&T Business, you can pick the best plan for each employee and only pay for the features they need.
This may look like a regular movie night, but if you're a kid with diabetes, it's more. It's the simple act of enjoying time with friends, knowing you understand your glucose levels.
Today, your thing might be swimming, but tomorrow, it could be something new. Introducing the Wells Fargo Active Cash Visa Card.
My lighting is bad.
You have 60 seconds to state your case. I have a $500,000 money dispute in my portfolio. Thank goodness you found the money court.
The biggest money problems.
You want to use the $150,000 to open another studio?
Need the best money expert.
A classic case of corporate versus franchise.
I think it's riskier going the franchise route. She's a partner in this relationship, and she's a partner in your business.
When I render my verdict, you're going to live by
it.
Money Court. New series starts tonight, 10 Eastern. CNBC. Get yours.
Selling a home is expensive and stressful. So we created our smart seller system to sell your home for top dollar and save you thousands in commissions.
I was amazed at the fact that my house sold in 1 day. Ideal agents saved me in the neighborhood of $20,000 to $25,000 in commission. The process was as easy as it gets. They are the #1.
Our service is free, available nationwide, and there's zero obligation. Call us today or visit idealagent.com.
84% of people have subscriptions they've forgotten about. Truebill helps you save money by finding recurring charges, notifying you when they're due, and easily canceling unwanted subscriptions. Download Truebill and take control of your money.
You're passionate about growing your business online, but the tech stack it takes to do it sucks. That's why we built Kajabi, the all-in-one platform that makes it easy to build digital products, create websites, send emails, and much more. Get started for free today at Kajabi.com.
Welcome back. There's been a lot of noise about an early taper, with Morgan Stanley the latest to move up their time frame. We just spoke to Dallas Fed President Robert Kaplan. So what is he signaling, especially on the heels of this morning's softer than expected inflation report? Joining me now, Michael Schumacher is head of macro strategy at Wells Fargo. Brian Reynolds is chief market strategist for Reynolds Strategy. And the one thing you both agree on is kind of the opposite of what Kaplan was just saying. He still thinks we should do an early taper. Both of you seem to think not so fast. Michael, I'll start with you. You say ignore the chorus and wait for the lead singer, meaning let's wait to see what Powell has to say, right?
That's right, Kelly. And Jay Powell so far has been batting away questions about tapering right and left. Any press conference, he just swats them away. And if you think about it from his perspective, what does he really care about? He cares about the labor market, which is doing better. But he's not going to really know a lot about it until September. So next month, people go back to school. We'll know more about the status of the labor market with respect to employment benefits rolling off. Those data come out in October, so we think it's probably too soon by at least a couple of months for Jay Powell to get excited about tapering.
And Brian, sure, you think, Brian, that the reason will become less pressing because inflation to you has peaked. You're looking at used car prices, you're seeing things roll over there, right?
Zoom out.
Last week I wrote that this edition of the reflation trade is likely over. It's stretched. Most people are looking for higher prices. I noted that wholesale used car prices are going down. The CPI used car component lags that by 2 to 4 months. Today we saw the CPI for used cars go from 10% to 0.2. That's pretty much in line with what I was expecting, which means that I think next month we get a negative number for the CPI of used cars. Additionally, oil prices are very vulnerable. If you look at the oil price curve, it inverted in the middle of the curve from 24 to 25. That tells me there's a greater risk of oil prices coming down than going up.
And I know that you're thinking, you know, if we're rolling over on the inflation picture, bond yields are probably headed lower, stock prices higher. We talked quite a few times about that. Michael, is that your view as well here? You know, I was just saying to Rick, where's all this buying demand coming from? He says, you know, it's everywhere. Basically, you know, there's such demand. Robert Kaplan, I think, said the same kind of thing, that there's huge demand for, you know, there's a lot of liquidity, there's a lot of demand for treasuries, and if Michael's right, there's not going to be a big concern about inflation and the trade-off on holding some of this paper for the next little while.
Worry about. I mean, it's
probably a little bit too soon to say the inflation dragon is dead. We'd say peak inflation has probably arrived in the past. I agree with that.
Still rising.
My friends in Wells Fargo Economics do a lot of great work, and they make the case that core inflation is still going to be very high through the balance, not just this year, but next year. So the inflation backdrop's improving, but it's not great. So to the question of why people are buying treasuries, I think Rick had it right. The market's backed up 6, 7 sessions in a row. Inflation does look like the peak is passed, so maybe from a tactical standpoint, a decent time to get in. But for a fundamental buyer, for most of your dealers, Kelly, I'd say wait. Take it easy, take a deep breath, not quite time to get in.
And Brian, what would you tell investors in terms of bond yields and stock prices for the next move of this market?
Let's see what the 30's showing us.
I don't think I've ever seen Rick Santelli so excited as about over a 10-year auction as he was just a few minutes ago in the segment before us. That points out how much underlying demand there is for bonds from pension funds and insurance companies. If yields go up a little, they jump on them and they buy them. More importantly, from a big picture perspective, that means next month, when the credit market opens up after Labor Day, there's going to be a surge in corporate bond activity that's going to lead to a flood of buybacks and mergers. The investment banks can't hire enough junior bankers to keep up with these deals, and they're likely going to accelerate.
That's a great point, and we've seen those pay curves moving up for the young bankers, and the way that you describe it, it all kind of makes sense. Supportive of equities here as well, as we have another day at record highs. Brian, again, you were early on this last week. We appreciate you joining us, Brian Reynolds. Michael Schumacher, really appreciate it as well, talking through the actual timeline table we should be expecting. We'll leave it there, guys. Thank you. We'll check in soon. Coming up next, could we see the first monthly drop this year for residential REITs, as the Fed's Esther George says froth in the housing market is starting to back off. At the same time, bidding wars for housing rentals are starting to pick up. What will it all mean for the REITs? We'll explain. Stay with us.
You say I got a crack in my windshield.
And Lisa, maybe less heartbroken.
Geico lets you file a claim any way you want.
Are you crying?
No, there's pollen.
Geico.
Hey, good looking. What's this I hear about a new show? Yes, it's Money Court, where I solve high-stakes financial feuds. You had me at money. My superstar legal advisors and I judge cases from business deals gone bad to life savings in chaos. And I make sure financial justice gets served. Need an investor? I smell a royalty deal.
Money Court, new series right after Shark Tank, August 11th, CNBC. Get yours.
Introducing 48 square centimeters of 2% cashback earning potential. This is the card built for real life. The new Wells Fargo Active Cash Visa credit card, that's real life ready.
Cover a lot for as little as 33 cents a day. It's time to help people customize and save with Liberty Mutual.
Joby Aviation, another one on watch. They got the CNBC treatment today. They got a spike, spike, bro. Their line jumped up today on that. This is the daily, 4 hour. Blow. And blow. Look at that. Alright, so back to the option chain. $15 call, boy. But hit 14 today already. Joby Aviation is definitely part of that CNBC hype. Definitely fuels it in every time, bro. The CNBC pump. Let's see what the daily daily volume was, because I bet you it's going to be a huge difference. Of course, they got that CNBC pump. So 6.73 today. Average is 1.2. On the running days that we've had with this, 6.7. The previous session we had 1.5.
Back to the exchange. I'm Rahel Solomon, and here's your CNBC News update at this hour. The NCAA slapping Baylor University with a 4-year probation and other sanctions. This follows a years-long investigation into a sexual assault scandal that led to the firing of the school's football coach and others. The probe found that Baylor shielded football players from discipline for sexual violence, but that Baylor's failings did not violate NCAA rules. The probation is related to recruiting and other violations. A federal judge has ordered Donald Trump's accounting firm to turn over some financial records of the former president to a House panel, although the judge is not ordering that all requested documents be released. And in California, the Dixie Fire continuing to grow after destroying nearly 550 homes. The largest fire in state history has now destroyed more than 500,000 acres. However, containment has risen to 30%. And all the news, firefighters making progress against the massive fire just as heat and higher winds return. That's tonight at 7 p.m. Eastern. Kelly, I'll send it back to you.
All right, Rahel, thank you. Rahel Solomon. Up next, we have rapid fire. Where's the volatility? What does it mean to be the Amazon of assets? And people are apparently sick of slimming down. You see Weight Watchers stock today? We'll tell you about all this right after the break.
Ready, sous chef? Using fresh, quality ingredients can make or break your dish. And with HelloFresh, they always deliver, literally, to your doorstep. I love this dish. It's got more layers than a Canadian ski coat. And you won't find these in any old grocery store. Don't forget to add some of that TLC. Want to learn how I just did that? HelloFresh. It's fast, it's fresh, and it's the ultimate skillet shortcut.
Go to HelloFresh.com and use code VOD14 for up to 14 free meals.
Money Court is all about dispute resolution. I've got a judge, I've got a lawyer, I've got me. Money Court is powerful, visceral, and you can't stop watching it.
Money Court, new series, starts Wednesday, August 11th. CNBC, get yours.
We make USAA renters insurance for the stuff you love. Because if it's worth lugging up 5 floors, it's worth protecting for as low as 33 cents a day. It's that simple. USAA. What you're made of, we're made for.
Look at that, just save a little bit of time on that quick scan. So, got this joint made a strong push. We're going to need 52 higher before 276. So, it's dropping down toward the support level. But seems like the daily will probably get some better look anyway.
When you get back out there, however you get back out there, go green. Because everybody's green when you ride with Uber Green. Yep, even you guys.
296.70 underneath that currently. Let's see how we can, how this holds. Honestly, I think we're looking at a bounce. I've been playing this Docu bounce. I think the Docu's more likely going to be returning back over 305 to close the week at least. So calls are definitely on sale. If you buy the dips, not the rips, you'll see that. And $74. These 310s at $32 now. 315s are probably like $5. 18. They got worked. DocuSign got worked. Is it out of the water? That's the real question, because you don't want to jump in and buy the dip and it keeps dipping, right? So let's just look at this real quick. I'm not saying buy anything, to be honest. I'm just saying, hey, you can barely hear me? Okay, let me turn the TV stream down. Good. Thanks for letting me know, bro. I had no idea. Alright, is that better? That should be better. Let me know if the TV is a lot better or not.
Welcome back, everybody. It's time for Rapid Fire. And here to discuss a few more stories.
Trying to make sure I can get that right, but yeah, just turn the TV down itself. Don't need to listen to the TV anyways, but it's not better.
Never short a dull market. The low volatility ETF, the US has been hitting an all-time high today, along with the broader market. Don't be fooled by the wild swings in stocks like GameStop and AMC. They are definitely not indicative. Like you look at this low volatility chart, it's like probably about a 30-degree angle, just smooth and steady as she goes.
Let me do this then.
While we're all over here talking
Just
about
turn it down manually.
swings in the meme stocks, I mean the overall market is just steady as she goes.
Yeah, the core strategy is working. Now, while it's at an all-time high, the low volatility ETF is still lagging both the overall S&P 500 year to date, as well as the high beta, the more volatile, spicier type stocks. But to your point, a lot of the more aggressive
No, man, of course.
been pushed aside. If you look at, like you say, GameStop, AMC,
All right.
not been replaced. Things like solar stocks. So yeah, this is kind of a sleep at night.
Is that better? That should be better. Can't really tell. Desktop audio.
That's fine. And if you want something that you can kind of sleep on at night,
A little bit. Gotta really get this correct, so appreciate you helping out with that.
The huge swings are great for traders, for investors.
I guess give me a thumbs up if it's better.
Maybe some dividends, low volatility in the long term.
I just wiped my own face out on this thing. Hold on.
To increasing your net worth.
Let's minimize this.
there's a list, Home Depot. I'm sure
Put
these
this
are all
back.
style factors that come in.
Needed it. There we go.
This is the other story of the market that you're not hearing quite so much about. Let's move on to something that a little bit more traditional in terms of volatility, and it's the latest that's been happening in the crypto space. We've had Coinbase and Ethereum, Ether jumping more than 50% in the last month, back to levels that we saw in late May. But again, a huge pop off the lows. And for the first time, trading volumes of Ethereum surpassed Bitcoin on Coinbase's platform.
All right, that should be better. All right, that should be better. All right, definitely. Nice.
Here, Brian Armstrong wants to engage in all of that upside and all that volatility that comes along with currencies like Dogecoin. You do have to wonder, though, that its competitors, like a Foundex and a Binance, they're starting to get more in the regulatory line and compliance, and that's really seen as a strength. So we'll see how this shapes up. And Mike Sinclair, what's the range these days for crypto back to the traditional market, sort of things like gold, inflation? I mean, where does it fit in your desk?
It doesn't really seem to track with macro type influence or even necessarily asset in concert with inflationary expectations. To me, it's a risk asset, and it behaves largely like a risk asset. It trades very closely with some of the more speculative parts of the market. And I'm on board with the idea that it's electronic gold, digital gold, but gold also has a little bit of a dive into the core asset class for 100 years after you were able to trade it. So I don't think that means it gets to the core of the market if in fact you think that's what it is.
Yeah, no, well said. As everybody's concerned about whether it's new gold, the gold itself hasn't always been that exciting.
Me and she wanted to trade.
Years during the last expansion. Speaking of performing well, Kathy Wood is not completely done with China, but she still has plenty of concern.
She was here for a little bit.
He's still not found a bottom. The K-Web China Internet ETF is still down more than 50% from its recent highs, and Wood does nearly all of
Clean up
the
this back
China
room.
organization ETF, and that index is down about 4% this year. So, Michael Yoshikame, Kathy was saying she's still open to specific innovation ideas, emanating from China, but I was surprised that she's not yet buying dips, so to speak.
Well, I think it's way too early to buy dips, Kelly. I think at this point,
There you go.
it's really huge unknown.
This random. Solid, solid. Yeah, this stream is stuff is new to me, so trying to make sure we get this right. Trying to see how I can get the best light from this window. I have to use this light itself, but stick to the script, make a fee. Definitely the one we've been looking at here. Cheap option trade to get on, bro. If you're in this, we entered this earlier for about $20. Started at 15, it's down to 38. 38. Hey, relax. Stop. Sheena Stalker. Say what's up to YouTube, She. Right here, how you doing? Y'all can barely see her, but there you go. Put her up on the screen. Anyways, Space Game flapped. And we're out here chilling. Getting rid of these cheap ass plays. Alright, so next up, we're gonna look at 4 of these to see what's good in this options flow. This chain. Give it a solid one right there. OH, what's good? If you feel like it, man, you don't have to, and you probably won't, but hey, share the jump. Let people know what's good, how we doing this, and what's happening out here. Appreciate you checking in. But anyways, let's keep it rocking. So we got McAfee here. We're gonna go for another chart here. We'll go through the chat, watching the Discord channel. Moderna, if you didn't see that, we got work today. I'm gonna pull that up real quick just to look at how crazy that shit is, and if it's still dropping, it still is. Alright, so let's zoom out, because this is madness. Let's just do a 5 minute. Don't have to watch it like that. Let's go. Complete opposites right now. Moderna and McAfee. So here we go. Moderna, as you know, had positive results, obviously, when they had their COVID vaccine come out, but you know, there's a bunch of other things happening with upgrades, and last week pretty sure they had like a bomb rings. But regardless, they ran up to like 500 just about, not a little bit over 500. What was the 52 high? 497. And so now we're seeing at 379 as they are getting clapped back down. Let's see where they're coming from though. And look at the daily chart, see how reckless these spikes have been. So huge gap fill that can be done. It's open 360. This is when the breakout started last week. And yeah, looks like we might be coming back for that touch right here. Definitely something you gotta watch out for. As things go straight vertical like that, there's always room for it to get clapped. Or they can just keep climbing. Fortinet is one of them that is in a similar position now. If you don't know what that is, you're in luck. I'm about to pull it up right now and let you know what we talking about. It's actually getting hit a little bit now from its levels that it was at. Not too far from the 52-week high, $8 off. Just time more so running out. If you're holding a call, of course, but if you're a long-term investor, you're not really worried about that. Alright, so here we go. 30-minute chart. So let me go to the daily on Fortinet first off, because this is where you really gotta look at it. This is crazy. Crazy. Alright, so it's more light. Alright, so Fortinet right here. I don't know why I still have this trend line. It's out of nowhere. That got warped. trend line going straight up. No, that's definitely. What? I'm not trying to order this. We're good. All right, here we go. So, Fortnite has been going straight vertical since the end of the year in November. It's been rocking. Had a strong pullback after it made that 193 touch. Came all the way down to 167, and now again, it's continued this run throughout the entire first half of this year, right? Fortnite recently started to set up what I like to call what we know as a bull flag, but also could be hitting the top. We've been seeing a little bit of drops in this in the volume, but it's mostly institutionally held. So, going to be a fun one to watch, as this one is definitely overvalued at this moment. Right now, the fair value, shout out to my homie Tom Nash, is 260 on this, based off of his DCF. Just entertainment, not financial advice, but it was a solid thing to watch, as it just kept climbing. So, does it have more juice in the tank? What's the next move for it? Will we get a retracement similar to anything we saw in Moderna, 280 level for a bounce, or we just keep running it up? Time will tell us early enough. Don't get us wrong. But gonna pull up some new plays right now, stay on top of the market, and show some new things popping in terms of this flow. Let's try to navigate through this flow real quick. So, going through this Discord, and look at the scanner. We got on here. Yeah, space got clapped. I gotta pull that up for y'all. Let's look at space real quick. Take off FTT. Space got clapped. $4 down. Sheesh. What was the news they dropped right here? What was unusual activity? Oh, wait, wrong one. News. Alright, so unusual activity detected about an hour ago. See what pops up for that. McAfee, still chilling here. Alright, ones I wanted to look at. Go into this unusual activity, unusual options activity list we have going on here. My fault. So LAC, another one I'm looking at on that list. LAC has the 25 call as an unusual play in terms of the volume, expiring on September 17th. So 17, wow. 25, what's the 52-week high on this thing? 52-week high is 28. Let's see how this is performed over the last few weeks. Alright, let's go to the weekly, not the daily. Alright, so hey, weekly, we got a pretty solid gap here. Just trying to fill. Ship the 23 level right there, 28. It's a solid bounce, it's curling right here. This is a smooth entry. Yeah, LAC looking beautiful. Let's see what the options look like though. You know we all about the options. So August is dumb cheap. I'm not even gonna look at August. They got unusual ones for next month. And how unusual? They're $44. They're up $76 today though. So
Starbucks Triple Shot Energy gives you energy. We want a losing level talent.
The stage is yours. I'm really nervous. I don't know what I should wear. Just wear something that's
yeah, it's definitely one to put on the list right now to watch.
on the Spotty Network. This is what she heard.
Just wear something crazy. Remember, it's a costume party.
Give a real shout out for that. Somebody brought that up in the Discord earlier. You know, you gotta show love. Discord family. Definitely point it down. Definitely point it down.
Anybody want to split a turkey leg?
let's see what else. Now, lithium definitely been turning up. We still have McAfee. It's going to be a slow mover. Average volume today is probably exceeding that at 2.2. Yup. And average is 868. Word. Let's look at these orders though. 400, 500. This is definitely a big block right there. 25, 100, some ones and fours, some retail penny buys. 100, 400, 500. Alright, I'm with it. You can see this rocking. Definitely can see that rocking. Alright, let's keep this moving though.
Where are all of these batteries going to go? It is one of this year's most anticipated IPOs. From the East Coast, we are watching some of the key players in the alternative.
So Virgin Galactic, people are buying puts for September 9th at 24 strike. So we're getting it right though. YouTube stream looking pretty decent. I can't complain. Uh-oh. Looks like my YouTube TV isn't moving anymore. Let's fix that for everybody. I know you guys can hear it, but I'll make sure you guys can see it too. So there we go. Edit that real quick, and then we're good.
Profit margins, gross margins actually expanded by about 4 points to 74%. They even issued upbeat guidance. So let's talk to the CEO about these results and more. Courtney Reagan joins us with James Reinhardt. Courtney.
Jeez, I gotta make this bigger for you guys.
James, thank you for being here with us. You know, Kelly ran through the quarter. Analysts pretty positive for the most part, but the Delta variant is really throwing a wrench in so many different things. Are you seeing a change in behavior in either your consumer or your business clients as a result?
Yeah, Courtney, I mean, we had a very strong quarter. I think we updated guidance for Q3. I mean, I think we're feeling very good about the progress of the business, but you know, the Delta variant is one of those things that, you know, we're keeping an eye on.
Trying to fix this stream. That's my ability, guys, so sorry about that. There we go. So leave that big. Make a fee pull back.
Processing time is the one part of the report this quarter that a lot of analysts are fixated on.
Not crazy there. See what else we got popping, fam. See what else we got popping.
Brought it down to 12 weeks, but then that's up from 8 weeks. I mean, what's the long-term plan? It doesn't seem like you're going to hit that 2 to 3 week processing time by the end of the year. Aren't you missing out on these selling opportunities if you can't get the inventory processed and online?
Yeah, I mean, Courtney, look, processing capacity is way up. Processing hours are way up. So we're putting more items online than ever before.
Alright, MU has some unusual activity. LAC just talked about that 25 call. AMC, double, triple D. There's some pretty solid ones in here, yo. AMD. Ouch. Cliff. Intel? Let's see.
But you don't get a lot for it. What would you say to people like me who have dabbled with these platforms and go, you know, I'm not sure if a couple bucks here or there is worth my time, especially if you have to wait a long, long time to kind of get that. Where do you think you're getting to a point where you could give people more for their money?
Some strong pullbacks. McAfee getting one here. Let's go. I ain't tripping.
Once you drive it off the lot, you know, you lose 40% of the value or whatever it is.
That's healthy. That's a healthy pullback. It's at 370. Still going for this bounce here. I want to see it obviously bounce a little bit earlier and just keep rocking, but not a perfect world. But this is good. This is the 5 minute though. Put on 3. I like looking at different time frames. You should too. I think it helps. Look at that. Make a feed. One bounce here. My dog just going crazy for no reason. Alright, so we're going to come back to that. Put something new. Let's see how the market condition is right now. Just load. A pretty solid trend right now for the markets. NASDAQ trying to act up though initially, but whatever. It's alright. It's behaving. You know what I mean? Everything had at least 2 had a little dip. S&P and the DAC. Light in the box. Some changes in here. HPI. The squeeze risk. Still there. Upstart. Still coming down. Well, not coming down, but maybe a little bit from the high, but still not too far from it. That was a solid run after earnings. Bit mining up 13%. One group. SDKS chilling. 52-week highs. New. What? So let's see, we have near the high, new highs. How's Beyond Spain looking currently, though? We'll do that in a second. Let's see what's near the highs. Advanced auto parts. Okay. We got some solid ones in here climbing up. Morningstar. Ooh. Civio. Camtech. Sykes. Nothing too exciting. Advanced auto, though, definitely. I'm looking at that.
Meanwhile, housing boom isn't just raising prices for home buyers. Good luck trying to find a rental these days. We're going to run those numbers for you next.
So, average volume is 737K. Today's is 155K. Holla at those low volume stocks if you bought that life. Definitely one that has no boost. Trying to turn this down for y'all. I know it's loud. But if you can hear me over that background noise, then the TV I'm in, then it's all good. We'll leave it on and such. Just let me know. Alright, so here we go. Advanced auto parts. It's been climbing today. Climbing. They got mentioned today on CNBC, and as they approach that 52-week high. They approach the 52-week high again. Still down, tend to bounce. Looking sort of bullish on this move up. This was at the end of the month, probably. Yeah, there we go. So, let's see what we got in here. The 220 calls for next week aren't even that far off. They're near 220 at this point already. Delta is even worth it, 21. Okay, that's cool. Beta is 14. I think we can get a decent push off of that. Just as it gets closer to that, you should be mad secure. So, you gotta definitely watch out for that one. McAfee, got that boost. I think it's gonna keep running a little bit later, but today it's starting to cool off already. Look at that 5-minute chart, boy. That one is still waiting for the bounce. Alright. Still waiting for the bounce. Alright, let's get it though.
That's why I started MedHall. City launched the Impact Fund to invest in both women and entrepreneurs of
There's some
color.
plays I was looking at yesterday. Let's see what we got. Let's see what's moving. Today, put this one up. Sean Williams. Want to see this one rock? Got a pretty solid chart too. Sherwin-Williams has definitely been a company I felt pretty bullish on. Paint prices going up. Low volume, average volume is like 1.1 mil, so definitely want to get something with enough time and volume. But I think the 310s wouldn't even be that crazy right now. 366, 71 added today. Pretty short volume. Pull something more interesting. I bet. Ideonomics, bro. Look at this. This was the penny stock that got taken by Wall Street bets to the moon. 2.5 call was one we're looking at recently. Shout out to my man's Joe Unit. So make sure we got our indicators right. Line style needs to be set up. This is why I'm looking at some crazy shit. This is a major key for your boy, and you should probably try to implement this in your strategy as well. Different candle styles, man. High Kanashi is one that I love more than anything. It's a Japanese trading style or trading candle that helps with removing a lot of the noise. You know what I mean? Like, just look at the difference on the regular candles, and then look at that. That's the regular candles right there. On the right. High Kanashi on the left, but let me do it for both so you can see the differences. You know what I mean? That's the noise that's filtered out. So this uptrend has still been solidified and still looking as if we do not have a worry because we still have the rip of rips. Meanwhile, you're looking at a different candle scheme, you're going to see this fill, and you could probably sell on that one, you probably want to sell here. You know, some people just gotta find what works for them, man. So this is why you do these trial and errors, you study, and try to always improve on whatever techniques you thought you knew. You never know it all. Alright, so here we go. Ideonomics. Looking like it's ready for a bounce. Just getting back to its normal level right here. It's flat on the day. Yeah, SPY looking. 2.5 falls for Ideonomics are pretty cheap for next week. They only cost like 15. So it's definitely a cheap trade in there. SPY looking hit a little bit. Nothing crazy though. Not even $1 down. I think 444 could be possible. Just $8. It's looking like it's in a little double top here. It's a little better. Let's see. Small time frame. Oh, wrong candles. Oh, there we go. Looking better already right there. You see that? Alright, so here we go. So blah, bounce, McAfee, bull flag, bear flag, drop in. Definitely looking a little salty, but not worried about it yet. Still in a decent spot for us. Where did my SPY options just go? What the hell? What the fuck just happened to SPY? No, that's weird. It's just me. Okay, let's see. SPY. Refresh the thing. Okay, that works. SPY should work. There we go.
The CPI number today was probably consistent with our outlook. We're expecting some of these extreme moves, used cars, other items to moderate.
So a little SPY might not hurt anybody right here. Looking like we might get a nice little bounce. McAfee looking like it's gonna drop though. check back in on some of our other friends. Alright, so we got my favorite over here, one of DocuSign. Here it is, $2.94. These are getting clapped. Make a fee. Come on, you can do it, B. Not worried about that. Futu. This one's getting clapped. Chinese beatdown. It's got a nice little push coming in right here, but hold on, wait. That dash? Oh, that's the crypto. Never mind. I'm about to say DoorDash is on here. What did I say? Yes, this is facing a denial right here at this 200 EMA. I'm gonna watch to see if this hits another one. This is definitely zoomed in super heavy. Yeah, Futu looking still pretty rough. Look at that. Bear flag. This could be potential reversal. I mean, it's out a little bit higher. Nah, it's coming back down. This is going to be another denial, I think. I'm not even playing Futu today. But let's see what it would look like if we did. 110s, 90, 115s, 35. I was looking at those for a little bit. 100 should be a good little put idea. 138. I'm going to wait on that. 95s, I ain't going to touch. Let's search for some EOA. Do you have any EOA? Calls and puts have EOA. This week, 103 puts. It's almost there already. And then the calls for 120 and September 3rd. I like what we're looking at here, though. We got some decent moves. Uh-oh. Somebody told me that my TV is frozen.
Value outperformed growth. So when rates go higher, we begin to discount those future cash flows for a lot of the tech stocks. We're seeing that sector in the NASDAQ today. We're seeing some of the other stocks, more the Dow stocks, show some strength. Is it real? Are we just pedal picking and saying we've got enough data points to support this thesis? Maybe, but the pendulum right now is swinging in favor of those that are saying that inflation would be transitory. So that seems like it is the case, Lindsay Piegza, because pedal picking aside, I mean, if you look at the 10-year Treasury note, the bond market right now, we had an auction just go
Alright, so we're looking good though. Stream's looking right. Let's get the flow up in here again.
Robust demand for yields at 1.35%. Dealers only had to take down 10% of the overall offering. That to me says there is still robust demand for that type of security with low yields, even in an environment like this where inflation is part of the picture.
Oh man, this is unusual where I was going to do a little bit of the flow here. See if we can get the flow into the mix. So, put the flow up for y'all for a little bit. Nobody in here anyways. But if you are, you're in for a treat. This big ass screen I'm moving around, if you can see it. I'm just fucking up my stream now. I'm trying to move this everywhere. Alright, let's just do it like this. I'm gonna leave that there, put this here. I'm gonna just cut that out actually. Cut the flow off because it's not gonna make sense right now. I'll just have to do a switch screen for it. I'm gonna set that up in a second.
About tech stocks a moment ago, but what is your advice specifically for people here who think that we are in the transitory or peak inflation camp, and if we're not, basically sum up, if we're in peak inflation, you know, then we want low bond yields, more to tech stocks, and if we're not, and what Kaplan was saying is correct, and that tightening time
but I think that anytime you just look at an A or B answer in the market, you're probably getting ready to make a costly error. Having stocks in a more diversified portfolio where you have some value, where you have some rebound stocks, we've been talking about that for a long time. And yes, some of these high-tech stocks can be appropriate. So when you look at the macro, I think you said it perfectly, Kelly, but when you drill down in a portfolio to the micro, some of these tech stocks are just behemoths and are earning money and are increasing earnings. A year ago, the S&P 500 was 24 times earnings. It's now 21 times earnings.
So it's a clean Credit Suisse is what I was looking at yesterday. I think that this could be really, 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 really big in terms of the squeeze potential on this. So we're going to be watching that one. But let me show you what it's looking like right now. Whoa. Dang, trade desk. Junk got collapsed.
Vaccination will be required for access to the trading floor. Previously, unvaccinated individuals working on the floor were allowed access providing they were wearing a mask. That will no longer be the case. Exemptions will be granted for medical or religious reasons. And this is not a surprise. The exchange already requires that people visiting to ring the bell and those coming in for the IPOs must show proof of vaccination. This merely extends the requirement to those who work on the floor. Other large companies
Alright, so we're good.
Disney, Microsoft,
Roll call being picked up.
vaccination to return to the office. So the NYSE is simply following a trend already evident in corporate America. The NYSE also announced it was expanding on-site random testing to include vaccinated personnel. And Keller, this kind of is emblematic in NYSE of the debate going on around the country and about what the right.
Looking at some big orders coming in. Gonna try to track some stuff down here real quick. So let's see. Size of these orders. We're gonna look at the 1,000, 5,000 blocks. Let me see how big. Let's go to 10,000.
Now, any sense from your folks down there about whether or not they feel good about this vaccine mandate, or whether there's going to be some
fun to watch.
from the employees on the floor?
The NYSE floor I have found on is very representative of what America that includes on things like this. So there is.
Alright, so we got this set up right now. Gonna reset this filter real quick. See what I pulled up. Alright, so using the unusual whales, shout out to a homie, flow tool right now. We're gonna look at different premiums and different strikes across the, oh shit, what the fuck? Yeah, SPX puts. People selling the puts, some people bought the puts. What's more so? So the size, 35, 2K, workhorse puts. Selling puts for QQQ. Cross strike calls 820, 250. Currently it's at 240. We got a pretty decent size 3K, 35K on the VIX. You behind puts. CNK, Micron. Okay. So there's some strong Micron info coming in right now. Let me turn this down a little bit because I know this is going to be a little bit louder than it needs to be. But we got a pretty good amount of stuff in here. The VIX definitely has a lot of puts coming in for it. QQQ, GM puts for next year. Gosh. HYG, UAL, the airlines next week. Got a decent amount of calls flying in for that one too. Let's see some cool stuff. Hold on. Let's see for the earnings. We got approaching it now. What is in the mix? SOC puts being scooped up 300. It's at 295, so I'm not expecting that to get anywhere over that. People selling calls 300, so definitely very bearish on that approach. JD buying calls. Okay, Walmart calls 125. They're already in the money though. All right, let's see what we can find. So Walmart, a lot of call activity. Super bullish activity is looking like for Walmart. Jeez, into next week. We have, damn, there's a lot of fucking calls being bought for Walmart. I'm talking like, and the whales aren't that crazy. I mean, it's under 1,000, the orders, but there's orders of like 700, 2K. So, these are just single orders. One of the crazier ones, JD 80 puts. So JD, seeing that drop a lot more. Those are 917s. Let's go for a large bearish flow. I'm gonna scroll through all of these settings that we sort of have in here right now. It's pretty awesome. If you don't use unusual whales already, definitely check it out. Go to my Twitter. Right here you can follow it at the Cheap Trade and you can get a discount on that, and also sign up for my Discord where we talk about all the plays, long-term plays, short-term plays, penny stock alerts, infrastructure, trading thoughts, stock tube. So I put in different videos and things to help you just study and catch and stay up to date on your own time. If you're not, reading persons, I type a lot of stuff in the chat daily. So here we go. Moderna, a lot of 280 strikes. All right, we got a lot of people going long Moderna here. Some people buying puts going into next week. Jeez, yo. Fang. People selling calls on Fang. Alright. Open interest on some of these are pretty hefty. Let's find something nice though. We need to find something nice. What's been finding? Tesla calls and nothing too crazy. 917. We're looking at what strikes though for these. You got the 136 strike. Nah, that's a lie. 136 on Tesla. You got bread. Alright, so yeah, that was what? Premium 1 million. How many did they buy? They bought 22. Spent $1 million on Tesla in the money calls. They got bread, bro. So someone's really been heavy on this one, but it's not even like out the money. If it was out the money, that'd be a little bit more funny, you know what I mean? But this is actually pretty hefty one right there. Let's throw that on right now so you guys can see that too. So let me set that up so you guys can see the flow with me. I can switch back and forth with y'all. So let's do CN2. Oh, I'm gonna vanish for a second. Alright, maybe I didn't vanish. Yeah, there it goes. I'm back though. Alright, so I'm gonna group. Oh shoot, I did it again. Group this. Oh shit. Group this and group that. I'll keep all this stuff together. Pardon me guys, we're going also through stocks and a YouTube tutorial on how to set up your YouTube stream. So here we go. Turn this up, baby. Alright, so video capture. And I believe leave all that there. There we go. Got that group together. So now we're going to copy this and make another scene. Add a group. There we go. Getting this YouTube thing down, son. Alright, here we go. Now for y'all to see the flow. Last part, I did it. did it.
By the fact that high prices will cure high prices.
All right.
Well, there's two pillars to our thesis of the commodity super cycle. One is a structural rise in demand driven by policy. You know, a combination of redistribution policies that we saw with the
It's organized so you can see that flow I'm talking about a little better.
also the green capex, the environmental policies are driving it. So that's one pillar.
Keep moving this whole entire thing.
Is critical is a structural decline in supply due to underinvestment. In oil in particular is severely impacted by this. You know, the case of point. No investment in U.S. shale patch, no investment in non-OPEC ex-U.S. Meaning OPEC really is the
Alright, here we go. We're getting this set up, though. We're getting this light.
think about this market. It was a demand-driven market over the previous 6 months. Going forward, it's going to be a supply-driven market, and that's structural in nature.
Jeff, the final question on this, to turn it on its head,
Dang, this is so tough, but it's fun. Appreciate your patience.
I were to ask you, hey, I'm from the White House and I want gas prices down, what's the way to then get oil or gas prices down?
Alright, let me just finish up the last touches on this. Sorry about that, guys. Appreciate that, but we're getting this right for y'all. Do it one time, then I can do this again. Okay? Get the flow to go over this. Bring that out the picture. My fault. I'm trying to make this a little more clean.
All right, still ahead of the show. App at tight for regulation. Get what I did there. 2 senators introducing new legislation targeting
There we go.
the application market, currently dominated by yes, Apple and Google.
Video capture, we're good.
Plus, further ahead, the great crypto paper. Details of what could be the largest crypto heist ever.
Whoa, the largest crypto heist. What y'all talking about? Miss me with that heist.
Some cleansers get a
Element information dominance.
moisture. CeraVe cleansers help me maintain my moisture balance with hyaluronic acid plus 3 essential ceramides to help restore my natural barrier. So we're CeraVe clean, CeraVe hydrating cleanser.
I'm not gonna lie to you, I have no idea how to change this Twitter thing to actually be vertical. No idea, bro. No idea. Let's see. Oh, here we go. Wow. Figured it out. Right click. Does it all. Yes. It's getting better. A little messy, but it's there. It's there. Let's look at this photo. Alright, so if you can see the flow, you can see what I'm watching right now. We're gonna move through this a little bit. SPX is on here. You see all these are the live options flows. Shout out to Unusual World. We got the biggest, smallest, customs. My dog has to use the bathroom, so she's gonna figure that out. I'm just kidding. Biggest whales on here. These are definitely bred. Yeah. Jeez. These are rocking. Buying puts on Workhorse all the way into next year. Yo, somebody knows something. Premium 2 mil. What's it currently underlying is 978. Yo, they got like there's no chance this shit gets over 20. Gosh. The premium was 2 million spent, bruh. Niggas got what? They got 2K puts for next year? 20? Yeah, they loaded this shit up. That's awesome. Alright, so SPX has been getting a lot of buys, yo. I need to look at this in the Discord too. Let's see what we got for unusual options on SPX. Aside from what we're looking at here, we got crazy flows. I'm seeing so much of this. You can see it on the screen right here too. Like, there's just so so much. SPX, Workhorse puts coming in heavy. The Roku puts, Tesla calls for October 15th. Open interest is 1. It's due about 22. M Jones 150. He's just chilling, trying to cash that shit out. Probably just exercise it, obviously. It's like, yo, man, there's nobody out here trying to buy this shit. Shit costs way too much bread. I'm exercising. I'm like, damn right you are. Alright, so Moderna. Let's go to all. Let's see the whole flow. Currently, live. Unfiltered. Retail and big buys. So, right now, big buys, nothing coming in just yet. Everything retail looks like we got a lot of sundial calls still coming in. People, it's at 80 cents right now. The premium's only like $4. Seriously? Nah, which one? $1 strike? Yeah. Alright, so we got a pretty good amount in here. Hope I'm not buffering right now on you guys. Looks like I might be. I have a lot of stuff going in. This live flow definitely hurts, so we're gonna have to switch back out of this for a little bit. Go to our original scene. Okay, so let's just do it like this, my fault. We're gonna take off the flow. Don't even look at that right now. Keep it to our original OG way. There we go. I was like, how did I mess that up? McAfee, we talked about it. Told you. You already on that. You already on McAfee. We talk about McAfee all day. Very slight feature, but it counts as a slight little mention. Let's see how the chart's moving though. Let's move this a little bit over because YouTube TV is a little out of whack right now. Make this a little bigger for you guys. I don't think we even need YouTube TV, to be honest. It's just a distraction. What we're doing here, no, I'm just kidding. I'm still editing this actually while I'm live, as you can tell, so. This is a little tough, but. Jeez. I want to move this around. So I can edit it a little bit. But it's hard to. Just trying to fit this a little bit better. So, and just move this over a little bit.
Unexpected video call? Magic Root Cover-Up by L'Oreal Paris. 3 seconds to flawless roots. 3, 2, 1. Roots gone. Suitable for all hair types. Magic Root Cover-Up, the #1 root concealer in the world by L'Oreal Paris.
Tune in, protect check. Zero in on opportunities.
Where are all of the batteries going to come from?
Red Hot startups.
It is one of this year's most anticipated IPOs.
From the East Coast,
We are watching
Let's fucking go. I'm gonna edit the shit out of this.
and the West Coast.
Oh, maybe legit.
The go-to destination for investors. Driving a future. Tech check. Weekdays, 11 a.m. Eastern, 8 a.m. Pacific. CNBC.
For all the unconventional ways your team stays productive, we've got got furniture to position them for success. Because at Office Depot Office Max, our business is to keep business going. Buy online, pick up in store, or get free next business day shipping.
Whether you're breaking a sweat or breaking the mold,
Position, size,
purposely crafted with an optimal blend of protein, fat, and carbs.
bounding box size. There we go. Yo, if everyone in here, man, appreciate you, bro. Alright, rotation's good. Alright, I got a pretty good move right here. Top, I'm gonna crop that a little bit. Loving this. Loving it. Make this a little bigger too. Look at that. A little better, but I'm not done. I'm not done yet. Hold up. We still gotta do this little thing. Alright, so it's movable. Gonna crop that a little bit. Alright, let's do this right. Crop to the left, move that over, crop to the top.
Well, it's been a roller coaster ride for oil today. As you were just discussing with Jeff Curry, the White House said this morning that it's urging OPEC to boost production. And if you look at the 24-hour WTI chart, you can see that price drop at 6 a.m.
Alright, looking good.
Now, this all
Got
comes down
that
to the
pretty much edited.
gas prices, which are up by almost 50% compared to last year. A statement from National Security Advisor Jake Sullivan said quote, that higher gasoline costs, if left unchecked, risk harming the ongoing global recovery. WTI initially dropped 2.5%, but recovered those losses in afternoon trading and then some. The contract is currently at $59.24 for a gain of 1.4%. Brent crude is at $71.45 for a gain of 1.2%. We also got bullish inventory data today, which showed a draw in both crude and gasoline stocks. Kelly, back to you.
Pippa, real quickly, there's also news talk to Jeff Curry, and he noted that perhaps what the White House is sensing is a breakdown with talks with Iran, where that might have been supply as well. So, you know, if our supply's off the table, if their supply's off the table, he's saying that, you know, he thinks that supply is going to be the main driver of prices.
That is certainly part of the discussion, and we have been looking toward that supply coming back online after those Iran nuclear talks. If those break down, and with this underinvestment in the U.S. production here in the United States, then we are seeing this environment of growing demand and supply continuing to be curtailed.
Transforming
And so the White
crazy.
House is saying, well, we got to make sure, or they're trying to make sure that gas prices don't spike even further. So they are clearly exploring the tools available at their disposal.
Pippa, thank you very much. Pippa Stevens. Let's move along. One of the biggest battles in the tech world this year has been the epic battle between Apple and Epic Games. At the heart of the fight over Apple's practices in the App Store is questions about the restrictions it places on developers. Now the issue has made its way to Capitol Hill. In just the last hour, a big bipartisan antitrust proposal was introduced in the Senate to protect competition and trade consumer protections within the app market, especially as it relates to Apple and Google. With us now is Senator Marsha Blackburn of Tennessee, along with Senator Richard Blumenthal of Connecticut. They are the sponsors of this bill. We thank you both very, very much for being here. Senator Blumenthal, I'll start with you. There's many different provisions here, but how would this be able to
These are the worst to watch sometimes.
developers here?
What we are seeking to do through this legislative proposal, and it is very bipartisan, I thank my partner here, Senator Blackburn, for her great work, is would break the ironclad grip that these two companies, Apple and Google, are exploiting to raise costs for consumers, but also block innovation and invention on
At the bottom, we're going to bring that up a little bit.
and Google App Store. What's really important is they're able to block the
That's the whole
innovators
picture. I'm
here.
tripping.
They can copy and kill, they extract
Keep that down
rent
here.
of 30%, and they use information from these developers to compete against them and prefer their own app. So what we're trying to do essentially is open these markets to fair and full competition.
Senator Blackburn, it's Dominic here. If you take a look at the way this legislation has been crafted, it looks into trying to at least ease some of the issues that these app developers feel financially speaking. We know that the commissions that they pay have been a hotspot for many of them before. They allege that Apple and Google shouldn't be able to charge the kinds of fees that they do. How much was the economic motivation behind this particular bill as opposed to some of the consumer protections that are out there as well?
Well, Dominic, I tell you, when you look at the situation in total, and what we hear from some of these developers is this.
We'll try to get this down
Take
to
away that anti-competitive behavior that Apple and
80,
Google exercise on a lot of
70,
small developers who
60.
would really like to have their app in an
I
app
need to do less than that,
store,
actually.
but
More
they're
than that.
basically
200.
from using third-party app stores. Well, first of all, you are slowing down innovation, making it more difficult to innovate. You're making it more difficult for these individuals to get funding, venture capital, angel funding, things of that nature, because people are saying, well, what is the payout going to be if Google and Apple are going to come in and take a big chunk? Now, that does threaten the bottom line, but I also look at this as a huge opportunity cost. And
Shrink
this
this
is
a
why
little bit.
Senator Blumenthal and also Senator Klobuchar, while we have worked together to say, okay,
this
how do we
right.
solve this? So
Get this right.
open these avenues of opportunity for more developers who are looking for a way to the marketplace.
So on that note, Senator Blumenthal, let me take it back up here and say, what would your world look like if this bill is garnered support, if it comes to pass, goes into practice? How would it change the experience that a lot of us users have to relate to using, especially our iPhones in the App Store?
Those third-party apps and developers would have equal access without these exploitive fees and without the intimidation and stranglehold that Apple and Google impose. And Senator Blackburn, right, and it actually was very dramatically demonstrated not only by the epic trial in suing Apple, but by the hearing that Senator Klobuchar had in the antitrust subcommittee of the Judiciary Committee where we all serve. These kinds of barriers
Oh, yeah,
to
this one's
competition
getting solid, bro.
really prevent the lifeblood of our economy, which is innovation, from going forward with new apps and new designs, innovations, lower costs to consumers. So this world would be a lot more hospitable to innovation and invention.
A lot more hospitable. Senator Blackburn, and again, I have to elaborate on that. Does that mean that I, as a user, might have multiple app stores on my phone? Are these provisions that would more relate to developers and their ability to kind of have that one-on-one data relationship with me as the customer and have better communication? What is the end goal here?
Well, you will see a little bit of all of that. You would have other app store opportunities if you get rid of some of this anti-competitive behavior. You know, we've talked about the ethics situation and looking at this payment system and being forced to use the app store's in-app payment system, preventing developers from communicating directly with consumers, having to go through that app, such as, to
think though. How do you do this?
as well as more options for an app store that would host some of these innovations.
What about Senator Blumenthal, the case being made here that if Apple and Google, just for example, do not control some of that in-app payment system, some of the other application distribution tools, that you could open a lot of
I'm getting nicer.
fraud,
It's getting nicer.
cybersecurity issues, to privacy issues. Many of the things that these gatekeepers, so to speak, do is protect people's privacy and user data. That's the case they would make, right?
That's the case they are trying to make. It is totally a pretext to maintain their monopoly position. And it is not only disingenuous, it's ironic because they're the ones who are actually invading privacy and stealing data
Bad boy.
from the developers, and all the while they're saying, oh, well, we're the privacy protectors. In fact, our legislation is has a specific provision that protects privacy even more than it is now. So this kind of argument is totally bogus, and I think it is going to be absolutely transparent.
Hey, what's up?
Actually, privacy would be better protected with this legislation.
All right, a bipartisan look at big technology. Thank you very much, Senators Marsha Blackburn of Tennessee and Richard Blumenthal of Connecticut. And we did, by the way, reach out to both Apple and Google parent company Alphabet for comment. We have not heard back yet, but if we do, Kelly, we will, of course, bring all of those details.
Absolutely, a lot happening on the innovation front in Tennessee.
All right, coming up next, we'll actually speak to the CEO of a company that helps apps monetize their products and their games. We're talking to the CEO of IronSource. He joins us next to respond to this particular piece of proposed legislation and more on apps and big tech. Keep it right here.
Discover Lash Paradise by L'Oreal Paris. A caring formula and feather soft brush for voluptuous volume and intense length. Lash Paradise by
So this
L'Oreal
is
Paris.
Tune in, protect check. Zero in on opportunities. Red hot startups from the East Coast and the West Coast. The go-to destination for investors. Tech Check. Weekdays, 11 a.m. Eastern, 8 a.m. Pacific. CNBC.
We made USAA Renters Insurance for the stuff you love. Because if it's worth lugging up 5 floors, it's worth protecting for as low as 33 cents a day. It's that simple. USAA. What you're made of, we're made for.
At PNC Bank, we believe in the power of the watch out. That's why we created Low Cash Mode, the financial watch out that gives you the options and extra time needed to help you avoid an overdraft fee. It's one way of making a difference. Low Cash Mode on Virtual Wallet from PNC Bank.
That's it. He's so goofy. Alright, looking good though. Can't tell if we're on right now, but we're just setting this up a little bit more. Still live.
shares of the app economy player ironSource are higher on record revenues for the second quarter. Its first report since completing an $8 billion SPAC merger back in June. The Wall Street Journal calling its part of the funding of the gaming industry, with 89% of the top 100 mobile games using it to monetize their platforms, including a popular one in their Candy Crush saga. But shares are down nearly 20% since that SPAC deal closed. Could more regulation of the app market lead to a more open environment to help give ironSource a possible business boost? Here for a CNBC exclusive interview, ironSource CEO and co-founder Tomer Barzayev. Tomer, I guess you just heard that interview that we had with Senators Blackburn and Blumenthal about their proposed regulation of the app economy. I wonder, as the CEO of a person who's neck deep in this app economy, do you feel as though Apple and Google need that kind of regulation, and will it help your app developers?
Yeah, hey guys, thanks for having me. I have to admit, I could only hear the last few seconds of the interview, so I'm not really aware of all that was said there, but, and I'm not a big expert, I haven't read the app yet, but we are a big platform, a big business platform in the app economy. We serve all the different constituents of the app economy. For what it's worth, we are
Let's do that frisbee in the trash and then the toilet.
open
Jeez.
environment
Alright, there we go.
have the ability to choose what platforms they want
Okay.
to use and how and to
Shim,
what extent.
stop. You have no toys
Without
under there.
knowing all the details,
My cat, I mean my dog is just over here scratching away.
for a full democratization of the
Alright guys, if you're tuning in right now, let me know in the chat. Live.
Tomer, I mean, that all sounds great, but I guess maybe there are some questions for those people who aren't exactly familiar with ironSource and the
Just
overall
going
business
through
model.
some of the stuff and editing the channel. You see my pup in the background, just running around doing their thing.
How exactly do you do
So,
that? How do you help these app
we're out
developers
here.
grow their distribution or make
Looking
more
a lot
money from the
nicer
stuff that
now.
they create?
Right, so it all goes back to how easy it is today to create great content, a great app, a great game. We all use our phones many hours a day. We download billions of apps to our phones. So it's all, on one end, it's so easy to create the app, but it's so difficult to make it a successful business. And we help those app developers and content creators focus on creating great content, while we as a business platform help them take that content and scale it into a scalable, successful business. And with that I mean, we help them with things like user acquisition and monetization, to analyze their users, to really analyze the behavior, how to better interact with the users, and how to grow those KPIs.
So, Tomer, just to kind of put the question differently then, are the current giant app stores, Apple and Google, are they have barriers to the ability to help developers? Because it seems like you've been able to build a nice business off of this with the status quo.
Yeah, look, I think Apple and Google are two important companies in this ecosystem, as many others, and natural channels for app developers to prosper. But an app developer, a game developer, will use multiple channels, Apple being one of them, and eventually players like Google and Facebook, that partners of ours, they use our platform, and we also use theirs. So in the case of ironSource, I cannot say that these players are really hurting our business or hurting our ability to grow, or our ability to help app developers and game developers prosper in the app economy.
Right, but revenue growth a little bit higher than expected for the latest quarter. Earnings per share roughly in line, as you mentioned. Shares underwater since the SPAC, but it was one of the biggest SPAC deals of the year. Tomer, thanks for joining us on the basketball.
Nice, I like it.
Thank you very much.
Tomer Barzayev. Up next, with yields on the rise, financials are trading around all-time highs. There's plenty of uncertainty around the Fed right now. Should you buy? Our traders will discuss that.
You love our new apartment.
There's too much pressure in the bathroom.
Good luck with the future in-laws tonight.
Don't overthink it. At least Geico makes bundling our renters and car insurance easy. Oh, no.
Oh boy. For bundling made easy, go to geico.com.
Hey, good looking. What's this I hear about a new show? Yes, it's Money Court, where I solve high-stakes financial feuds. Had me. My superstar legal advisors and I judge cases from business deals gone bad to life savings in chaos. And and I make sure financial justice gets served. Need an investor? I smell a royalty deal. Money Court.
All you do now is turn
Works in as
the
little as 15 minutes.
brightness.
Samsung 360.
Good.
Why are hundreds
There's
of
all the
thousands
windows
of
in here.
investors getting help for the Motley Fool? Well, it's simple.
Liking it.
Our average stock has returned over 500%, and that's 4 times the return of the S&P 500. When you become a Motley Fool member,
Alright, everybody tune in right now. We're just finishing up this live stream first day, going live. So, just want to make sure you get everything 100p. Welcome back. So we got the flow here.
Go to HelloFresh.com and use code TV14 for up to 14 free meals.
We are set, boy. Get back to the final hours of trading. Just to make it
Everybody
more.
who's watching, don't buy a Shark Tank. The CNBC premiere episode tonight, 9 Eastern. Get yours. When I looked around the yoga studio, I didn't see
Bless you.
football players, basketball players, or anyone that looked like I made it my mission to change them. Good job, gives me the tools and support I need to bring that mission to life online and entirely new ways. What will you create?
That was pretty decent. I like it. Guys. Let's get back to this. Alright, so what we're looking at now currently, you can see we have on the screen. Just tweaking right there, it's my fault. So you can see we have on the screen McAfee, it's got hit. And is back down here. Stand up for this. McAfee chilling, Futu still getting worked. Look at some other plays. Checking on some things. Crocs at 142. See how Upstart is doing after that earnings. Looking pretty good here. Trying to curl back up for another move. After hitting that 172. Okay. SPX.
Gina, we'll start with you. From a fundamental standpoint, do these financials deserve to be at record highs? It's been like catch-up trade for the better part of a year now.
No, this is not the same thing I was looking at. Hold up. Hold up. Let's put Apple on here real quick in the meantime. I'm gonna pull up something else.
Because even though their expectations is that their loan growth may be
Alright, now here we are.
cautious going forward because of the rate rise expectations.
We got new infrastructure play. See how it's doing right now? This is one of the ones we're looking at. 122.41. Going back for that HOD. Infrastructure ain't done if you're asking me, but let's see. Definitely one of the main players in that whole space, and if you did, might be able to get in on this rip because we had a pretty solid dip for a long time, and this day it was looking like it was no longer news. We're down to 165, that call option. Okay, it's not bad. You got in, you got out. Then you're good, no doubt. So let's keep this shit rocking. We got the flow over here on the side. You're still keeping that. We're gonna flash. I'm gonna flash over and look at that again for us. Let's get into what they are saying in the flow. Let's check out the new flow. So this new flow. It's over here. You see it right there at the bottom. Oh, made that a little too big. Can't even see me anymore. Let's bring that back. You can't tell it's my first YouTube stream. Alright, so here we go. I'm gonna get a little laggy here, so bear with it. So we have IWM in here moving. Pfizer's on there, Google, Nvidia, SPX, bro.
Why not just buy part of the position you'd like to have? That way, if the stock goes down,
Yeah,
you'll have an
Lily.
opportunity to add additional shares at a lower price.
Lily's just like an SPX.
I want to be the first 15-year-old to ever hit that button.
Nervous.
Oh, why did you give me Stellar
Just
Africa?
for something not too crazy. Remember, it's a business dinner, not a costume party.
On the Spotty Network, this is what she heard.
Just for something crazy. Remember, it's a costume party. Costume party.
This flow is really misleading sometimes.
Don't trust first impressions.
It gives me SPX.
Go with T-Mobile, the crown
SPX is this.
5G.
Anybody want to split a turkey leg?
Should be the financial sector, right? Is it?
Sure, it's wireless. What's your newest Wi-Fi password? It's Buick Envision. That's a really tight spot. I used to hate parallel parking. Me too.
Let's see, SPX right
Around
now.
you, all of you. Pay no interest for 72 months, plus current eligible Buick owners get $500 purchase allowance on 2021 Buick SUV models.
Tune in, protect Jack. Zero in on opportunities. Red hot startups from the East Coast and the West Coast. The go-to destination for investors.
Pulling up that SPX right now, looking at some of that flow. See what's on there. Go to that page. Make sure we get the right SPX because when I was looking at it for a second when I typed it in, Webull was giving me that penny stock. I don't think we're looking for that penny stock. There's zero options on that. Let's see what we got on the flow. This is unusual whales, by the way.
Like in your itinerary, search from over 5,000 planes. Okay? And you're on your way. Nothing better than a personalized meal on board. It should be a beautiful day in the Bahamas. We should be landing in about 20 minutes. A great vacation always starts with your flight experience. Use your time wisely. Just batch it.
I've been with Nell now for 2.5 years. I just feel like I am making a difference in her life.
AdCare.com.
This
You can find
SPX.
the help your mom needs to stay independent at home. Search for lots
got
of local
Daphne.
caregivers. It costs less than you
I
think.
keep seeing
Join
SPX
now.
calls going in.
Care.com.
According to this.
Welcome back. A crypto paper after stealing more than $600 billion of crypto. Hackers have begun
Not
to
bad.
return some of the funds they stole. Amy Javert has the latest details for us. Amy?
Let's go back to the flow and see what we see.
Hey there, Kelly. What a wild ride the past few hours have been here. Earlier today, an unknown hacker attacked Poly Network, which is a platform designed to connect different blockchains to enable what is known as decentralized finance, or DeFi as they call it. Now, Poly posted a message on Twitter addressed directly to the hacker saying, "The amount you hacked is the biggest one in the DeFi history. Law enforcement in any country will regard this as a major economic crime, and you will be pursued." Now, Poly urged the hacker to negotiate, and he or she did just that. And over the past several hours, according to Chainalysis, has returned roughly $261 million worth of the more than $600 million initially stolen. And what's more, the hacker here has been offering this explanation for why he or she pulled off one of the biggest cryptocurrency heists of all time. For fun, the hacker writes, "Ask yourself what to do had you facing so much fortune. Anyone could be the traitor given $1 billion. I can trust nobody." And he or she also says, "I understood the risk of exposing myself. Even if I don't do evil, I prefer to stay in the dark and save the world." So even though plenty of people will be skeptical of a criminal who stole $600 million now claiming to be a savior, Chainalysis suggests that some good can come out of this. They say, it appears Poly Network will get its money back and has also learned about an important vulnerability its team can now patch up. Ultimately, the ecosystem will be stronger for this. And that's not the way these crime stories usually end.
Eamon, if people are speculating, okay, this isn't so much because they decided, hey, we've made our point, we're going to give the money back, but because it's trackable. What do you think about that?
Look, I think this person might get found out before too long, and they're scrambling to return the assets before that happens. Law enforcement around the world tell us that they do have the capability to trace things on the blockchain, because remember, that's an open ledger, and normally hackers use crypto mixers and offshore servers and all kinds of things in order to hide the money. That doesn't appear to really happen here necessarily, so this person might be on the verge of getting caught. But bear in mind, you saw what the person has written there. We don't know if this is one person or a group of people.
Gosh, what's up with all this SPX movement though?
Hackers and criminals who steal money do all
I'm gonna leave that alone for now. Look at the new flow.
We appreciate it, Eamon. Jabber, attention's on back to the markets where it's got record highs. We've got the stay-at-home stocks, underperforming, and that's why the Nasdaq is down relative to the others.
The one that's got me so fascinated right now is what's happening with Moderna. And the reason why is because from a data standpoint, there are more and more folks right now searching for that mRNA ticker on our website than just about anyone else out there. It's really shot up the list. Not just today, over the course of the last week. Now, for good reason. We're showing you a 2-day chart there and a 1-week chart. But look at the spike up that we've seen. This company got up upwards of $190 to $200 billion in market cap. I mean, it almost feels like it, but I mean, of course, we have a B of A note out this morning, kind of put a little cold water on this whole run up in the stock. So yeah, it's huge, but there's still so much interest in shares of Moderna right now.
Yeah.
I'd be curious to see how long it lasts.
It's really surprising. And again, getting more chatter, even as we hope the pandemic is winding down. Dom, it's been great to have you. Thanks, everybody, for tuning into Power Lunch today. Closing bell starts right now.
Alright.
It sure does. Welcome to the closing bell. I'm Morgan Brennan at the New York Stock Exchange. More records set here on Wall Street today. The Dow topping 200 points to a fresh high, though the Nasdaq is pulling back again today.
A very good afternoon. I'm Wilfred Frost. Let's have a look at what is driving the action today. The latest read on consumer prices showed a jump of 0.5% over the prior month, which was largely in line with expectations. Core inflation up 4.3% year over year, decelerating slightly in June. Caterpillar, Home Depot, and Honeywell are helping boost the Dow as construction-related stocks see more strength on the back of the infrastructure bill. And the Nasdaq is lagging once again, in jeopardy of turning in its third down day in the last 4 sessions, pressured by a big drop in shares of Moderna. 59 minutes left to go. Materials leading healthcare on the bottom.
Coming up on today's show, a new way to play the electric vehicle boom. Battery recycling company Li-Cycle going public via SPAC today here at the New York Stock Exchange. We'll speak with the CEO about those opportunities and environmental impacts of the EV revolution. And speaking of EVs, Lordstown Motors is gearing up for earnings after the bell, along with eBay, Bumble, Sonos. We'll bring you all of those results as soon as they hit the news. Well,
Let's focus though first of all on the big stories we are watching today. Mike Santoli, as ever, is tracking the market action for us, and joining us to talk about the airlines and Southwest's new COVID warning is Karen analyst Helene Becker. Mike, let's start though with you and the broader market set for record closes again on the S&P and Dow. We are, Will, but as a matter of fact, I think we hit an intraday high each day this week. It's only
There we
3
go.
days, but each day this week on the S&P 500, and yet we're only up less than 0.25% this week. So it shows you we're kind of hovering and clinging to those highs. One thing that the S&P is working against is a modest
Let's see what the
pullback
flow is looking like for the day. Flow summary.
mostly an old economy-led
It's on the top. We had Moderna on there earlier. See if anything's changed. Ooh, ExxonMobil. Got a lot of calls flying in. See what Exxon doing right now. They're trying to turn around right here. And that 372 touch. Yeah, it's, Newport is still pretty good right here.
If you looked at this as a single line chart, it would have bumped the same level, value versus growth, and then kind of bounced off of that. So that's essentially what we're seeing now. Fewer stocks really are leading the way. This has been a concern for weeks. Take a look here at the percentage of S&P 500 stocks that are over
Let's see what these XLM calls are looking like.
and you'll see, even though the S&P
But the flow is still on us too.
we're right here on 55, 60 It's not necessarily an indictment of the sustainability of rally, but certainly a headwind. Doing a more selective market shows you that it's not really the kind of inclusive, high momentum, broad push that we often get here. Maybe that's seasonal factors, but something to keep in mind as we're looking for signs, perhaps, of fatigue as we tread water here for a while.
And Mike, the value versus growth chart, I guess, showing even when you're not seeing both of them meet up as they are now with strong gains for the year, that if someone's selling one of them, they're
60
probably
strike.
buying the other rather than taking together out of the equity market.
Yeah, absolutely. Well, it's been a story for more than a year right now that you've had really wild swings back and forth between styles of stocks, sector leaders and laggards, but it really has been in the context of a grind higher. The indexes have really been a way to sort of stay out of trouble. If you own just the S&P 500, you don't necessarily understand it. Something's always been working. Now, you can obviously have slippage.
Seeing what we got on these premiums though.
Once in a while as we pass it back and forth. But so far,
Call premium 612 mil, put premium 2.2.
Mike, thanks so much. Dow's up 0.6% beneath the chart as the major averages with 55 minutes left. Southwest Airlines warning it will see an impact to its current quarter due to Delta COVID variant.
And it calls it out a number in the zone.
Cancellations and a decline in bookings this month due to rising concern. The Big Four airline stocks down more than 10% in the last 2 months. Southwest actually up now, having broken low on the session.
Calls it dirt cheap for this week.
Helene Becker. Helene, great to see you. Thanks so much for joining us. So, just remind us exactly what this guide from Southwest was. Is this seeing a fall in bookings for the next year's worth of potential flights, or just a drop off in the short term?
If you don't have this tool, definitely check it out. Very solid one to have in your arsenal.
I would say the next 3 weeks that they're seeing a decline in, and it's not really a decline as much as it's a deceleration in bookings. And you would normally see a deceleration at the end of the summer, heading into Labor Day, as people go back to school and vacations and so on. But I think that would have been in the July guidance they gave us, right, when they were reported earnings. So what you're seeing now is this deceleration caused in part by this Delta variant that's finally impacting the forward-looking numbers. But it's really hard to get a fix on anything beyond like 4 weeks.
So, does it make sense to you that Southwest is covered in today?
Yeah, actually, yes, because I think what happened is a lot of investors with whom these stocks are down like what, 40% or
See
something.
what these looking like though.
And a lot of investors
60s are 90.
were asking this
Nice.
question on the conference call.
Let's see what it looks like a little bit closer though, because I don't think we need that long. I think we can get a touch beginning of this month at least, not the end.
And I think the buy side was ahead of the company on this, and even some of the sell side.
That's the end of the month, bro. That's 2 weeks.
Just on the idea
Just a little over 2
the
weeks.
Delta variant would eventually cause people to
Let's see the 60.
their
I'll
plans,
put that in.
especially
That looks pretty solid to me.
play in media all the time. And I think that people sold the stocks ahead of this guidance of these, and now that it's out there, and we said this morning in a note that
A lot of bullish flow coming in for Sun.
the last, everybody knows, so I think it's, kind of seeing people wander back into the group.
So Helene, it's Morgan. I mean, what does this do?
Upstate making moves. Got the alert. Let's see what they're doing.
Medium and long term for these airlines when business travel and the recovery there and the international travel are sort of, or have been, I guess I should say, kind of the big,
Go to our 5 minute.
questions for investors.
See that right there.
Again, so yeah, I think those are really great questions. I think we were certainly expecting, and still are, that after the holiday and people go back to work and school, people go back to the office.
Alright guys, thanks for tuning in. It's been real, and we'll be back on this jump tomorrow. Enjoy your power hour. We're gonna have a power lunch.
I guess we think the recovery
Peace
is
out.
somewhat
Peace out. Peace out.
non-linear, and that ending the year with business travel down about 50%. So we still think we're going to see a recovery. We just think it's going to be a little elongated, so that 2022 is better. Now for international, so that's really bizarre
looking at my YouTube flow to see how clear it looks, but it's been a little delayed.
I think that's what our concern, not so much that the borders are